Welcome back to another trade review. My name is Evan. In today's video, I'm breaking down the one and only trade I took today on IWM puts to make 62% to the downside. Absolutely nasty trade. Overall, I'm going to break down my bias for the day. I'm going to start on the daily time frame and basically just break everything down for you guys. That way you guys completely understand exactly what I was thinking going into this trade, because for some reason this has been hitting for some reason. Okay, so going into my screen, you can see here once again, I'm in the squeaky chair. So we're gonna start on the daily time frame, and I'm gonna break down exactly what I was looking for on IWM. Okay, based on the strategy that I trade, I had one main thing in mind. Okay, one main thing in mind, and that was that this candle, this daily candle right here, closed back. Technically it closed bullish, right? But it's an overall bearish candle. So you can see the previous day we came all the way down here, took out these daily lows, bounced all the way back up. And that showed that buyers were more in control. And then on this day, right, we opened, we pushed up, right, and we ended up closing. We pushed down, we ended up closing somewhere in the middle. So overall, it was a bearish candle, but this previous candle told me that we might have the possibility to go higher. And if we do go higher, there's many things on all the higher time frames. The daily, right? We got the 9 EMA here on the daily. The hourly has some EMAs that price is currently running into that I was all looking at in conjunction, showing us that we could have a push up or a take of some highs and then a push back down. So my overall goal was, before this candle was even formed, my overall goal looking at this daily candle was for price to push to the downside and pull back up. Now, I knew pretty much for a fact, right, that the market has to take some liquidity in order to move into one direction or the other. So with that being said, some liquidity would have to have been taken from this to the upside before moving to the downside. So with that being said, we go into the hourly time frame, and I'll show you exactly what I was looking at. So my main point was here at this 226.15 level on IWM. And what I was looking for was a sweep of this high, right? Or possibly of this high. I didn't mark out this high, but a sweep of that high or a sweep of this high to the upside and then a push back down. I also had this hourly fair value gap marked out. I'll show you guys exactly what I had. Price ended up invalidating this hourly fair value gap because we closed above it. So once we broke out of this hourly fair value gap, I'll be honest, I was just waiting to see exactly what price was going to do. And this is what price had done to me previously. So previously, one thing that I didn't notice was that we had a previous area of interest where, and this is a perfect example, price came down, it bounced, right? It tried to bounce again, and then it eventually broke through. And then obviously, as you can see on this previous day here too, we had multiple bounces at this key level. So bounce, right? And then bounce at this key level. So with that being said, I pretty much marked that out as a key level just based off of all these reactions off of this area. So to be honest, it wasn't completely in conjunction with my trading plan, with my strategy. Now, my strategy would have been, I would have been way happier if we went up and like took this high up here and then rejected. But if we're only going to go up to this area, right, I guess that's fine too. If we start getting reactions off of it and I started seeing the market reacting in a negative way, then I'm going to take a trade off of that as well. So with that being said, on the hourly time frame, that was the area. That was the area that we ended up running into. So then we can drop down I dropped down to I did the 1 minute time frame today. I couldn't find anything on the 2 minute time frame. I don't know, maybe I'm just missing something, but I literally could not find anything on the 2 minute time frame. And you can see we almost hit that area to a T. So as soon as market opened, we had to push down. We swept out all these lows right in here, basically all these accumulative lows right in here. And you can see this area, look, reject, 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 and then we flip that in the pre-market, and then we end up finding support in it. So same concept, right? Same concept as my as the higher time frame level, the one I just showed you on the hourly. Same concept. Previous resistance turned to support. So, and then on top of that, we had liquidity taken down here. So this was an hourly liquidity mark. It was an hourly or a 15. It was one of the two, but it was just a previous level of liquidity. We went down, we took it in the pre-market. I didn't want to take that, or as soon as market opened, I didn't want to take that because market had literally just opened, and I didn't want to take a trade right off rip. So we end up coming down there, pushing up, stopping at this key level, and we start reversing. So once we start reversing, on the 2 minute, like I said, I literally couldn't find anything because of this. Look at this huge rally up. We had like 1, 2, 3, 4, 5, 6, 7. Did I just freaking miscount that? 1, 2, 3, 4, 5, 6, 7, 8. 8 green candles in a row. Okay? I have to wait for a break of structure of this. So I literally would have had to wait until price came all the way down here and closed below this. So I would have had to wait until here, right? The move was too massive, so I moved down into the 1 minute time frame, and I began looking for an order block, fair value gap, or something to take a trade off of once we had a significant pullback. Another thing, when price pulled up into here, so price pushed up, it started rejecting off of this area. Perfect, wonderful. I'm not taking the trade yet because there's no entry, obviously. We get a reaction down, and then I'm going to zoom in a little bit more. We get a reaction down. And this was basically the previous up close candle here. No break of structure because we don't get to close below. No break of structure. Finally, break of structure. Okay. So this is what I looked for right here. We got a break of structure to the downside. And I marked out this order block. I guess I'll just make it like that. I marked out this order block right here. And we ended up breaking below it and then using it as resistance the whole time. Another thing I noticed was on the 1 minute time frame, we had a 1 minute fair value gap. Boom, right in here. Oh, what a coincidence that price is reacting off of this 1 minute order block and this 1 minute fair value gap. So we get a reject, right? Price comes down, no progress to the downside. We still have this because this was a decent leg up. So we had some consolidation here and then a leg up. So I'm not exactly looking to take a trade to the downside yet because we haven't made any progress past these lows right here. Oftentimes, if we get a huge push up, price can pull back, break a few of the EMAs, the 9 to 20, and end up bouncing at the 45 and then continue going up. I've gotten burned so many times taking that same exact trade, thinking that price is going to reverse fully when it doesn't. So with that being said, we stayed stuck to our plan, paid attention to what price was doing. And what was price doing? Price was consistently respecting bearish price action. And market structure. So we had this bearish for value gap, this blue dashed line right here. We had rejection, continuous rejections off of this, but we're just consolidating within this range. So we continuously rejected this bearish order block, and then we continuously rejected the bearish for value gap. Never breaking above, never closing above. We end up just continuously rejecting this area. Once we start to get some volume out of here and I see us, so obviously as you can see on this candle, we broke the low and we instantly ripped back up. One good thing I like about IWM is that you will see price react exactly how you expect it to react. If IWM is going to break the low, break this, these previous lows with this candle, then it's going to break the low. But if it's not, then it's going to do exactly what this candle looks like. It's going to come down and it's coming right back up, like immediately. So we end up getting continuous rejections in this area, okay? Zoom out a little bit so you guys can see. And we get a push to the downside. Once this candle closes bearish, and then this candle starts bearish, I enter the trade. Instantly, I set stops above this high right here, just the most recent high. And then the rest is history, right? I had a few downside targets. Downside targets included the intraday liquidity to the downside. So intraday liquidity, we had liquidity here and liquidity here. These levels hit to a T, bro. To a T. Mess with me, bro. Look at these. Look at these levels. These levels hit to a T. Price came down, smacked off this low, and then what did it do? It bounced, okay? It bounced straight back up, rejected back on down, bounced off of what? Right off of this low. And then it bounced back up, and then it continued on down for the day. But regardless, price went straight down to my level. I sold it when it got close to my level, and that was it. Now, I did hold some. I did expect maybe a further drop, but as soon as price started to push back up, I instantly sold the rest. So I was all out. I sold majority of my contracts here, and then I was all out by the time this candle started pushing back up. So overall, higher time frame, we had a rejection area. Then we zoomed in. Now, I normally do the 2 minute, but I did the 1 minute today just because I couldn't find any entry because we had such a massive rip to the upside. So we pushed all the way to the upside, right? I went to the 1 minute instead, and then I just looked for a bearish order block and a bearish for value gap. Price continued to respect it. Waited for price to get some decent volume out of there, and then I took the trade to the downside, and that was it. It set stops above the high and take profits at the intraday levels. Now, I'm going to break down one other trade that you guys could have taken today. That was my trade. And if you guys don't already know, the red arrows are my entries and purple arrows are my exits. But one other trade that you guys could have taken, if you wanted to take a larger time frame trade, you can see I had these lows marked out here, right? These were marked out from the hourly time frame. So we ended up, this dog just got back from lunch. All right, motherfuckers. All right, let me get back. Let me get my thought process back in check. Dialed. One swig. Dialed. Let's work. So we end up coming up in the day, and this is another trade that you guys could have taken if you wanted to. If you want to take a longer time frame trade. Now, if we go to the 5 minute, now I didn't necessarily see anything on the 5 minute. I did see a little bit on the 5 minute. I'll show you guys in a second, but it's mainly on the 2 minute. 2 minute time frame. We can see here, go down to the 2 minute time frame that price took out these lows, the intraday levels of liquidity, boom and boom, and then it ended up pushing back to the upside. Now, where did it push back to the upside? It pushed back up to these bearish fair value gaps on the 2 minute time frame. I'll mark them out for you guys just so you guys can see because it's the same concept. So this is a bearish fair value gap. Oh, I guess that's a small one. Now, I'm just going to honestly combine these. So this would have been a massive bearish fair value gap right in here. The main thing that I was looking for, this would have been a massive bearish fair value gap. We continued to respect it, but overall, my trade, like the trade idea that I would have had for later in the day would have been on the 5 minute. So that's a pretty wide bearish for value gap, but let's go to the 5 minute real quick. I'll show you guys exactly what I was looking at. All right, thought process back in check. We're absolutely dialed, boys. Completely forget what happened. Anyway, so basically, if we go down to the 5 minute time frame, we can see an order block. An order block? The fuck? What the? All right. We can see an order block, okay, on the 5 minute time frame to the downside. So if we look at, I'm just going to get this tool. I guess we'll draw out the box. So some order blocks that I come across end up showing themselves as this just massive order block. So this one, since it doesn't have very much of a body on it, right? We had an up close candle and then a down close candle. So it would have been a continuation order block. So normally you would draw it out from here, from the body. Oh, this is a box. But normally you draw it out from the body, basically the open on the candle, all the way over to the other side. And then it would price would end up coming up to around this area. Now, obviously price didn't do that. Why? Because the wick on the candle is too massive. So in this case, I'm drawing out the entire bottom side of the bearish wick, or of the wick on the bearish order block. Price comes back up into that area perfectly, and then we end up getting rejects out of there. So that could have been another trade that you could have taken on the 5-minute time frame, setting your stops above the top of the order block here, and then setting downside targets to the intraday, or not to the intraday levels, but I mean, one of them could have been the intraday levels for sure, but then you could have set higher time frame targets on the hourly time frames here and here. And then look at this, watch this. See where price stopped? See how there's no like liquidity down here? I'm like, what? There's no liquidity. Watch this. You go to the 1 hour time frame. Beep boop bop. Let me zoom in real quick. You're literally scared. Look, hourly fair value gap. Hourly fair value gap. Where did price stop? Basically the 50% retracement of the hourly fair value gap. Not exactly the 50% retracement, but pretty damn close. Okay? So that was just a knowledge drop for you. But so if you see this video before tomorrow, price just filled an imbalance and it looks like it's pushing back to the upside. So anyways, with that being said, hopefully you guys enjoyed today's video. If you have not already, hit that subscribe button down below. Like this video for more videos like this one, and I will see you guys in the next video.